Good morning, traders. It's 8:01 a.m. Chicago time on Wednesday, the 30th of March, 2022. And guess what? Today is the day I'm going to be doing a show with Futures radio show. And I want to remind you to sign up to qualify to win one of three high-end Bose Quiet Comfort 35 headsets. Great for calls, meeting with accountability partners, recording yourself trading, all of that. Sounds a little harsh. I'm having a harsh morning, man. How about this? Should be a little softer. I want to remind you to sign up, edgeclear.com/daily. So make sure you sign up there, edgeclear.com/daily. Only one entry per trader, and this is taking place today at noon Eastern. The entries have to be in by 11 a.m. Eastern. 11 a.m. Eastern in 2 hours. So make sure you do that today, and we'll draw six winners, 6 participants. 3 winners and 3 runners up. Okay, so let's get back to it. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 2202. Today, man, I can't get the sound right. Let's cut it down. This should be a little bit better. As far as the scale is concerned, it doesn't look too bad here, but we should be okay now. It should be softer. All right, I'm not going to mess with the sound anymore. The conversion trading pre-market summary sheet shows that the overall risk posture is mixed, actually mixed to risk off this morning, with the German DAX falling 138 basis points, Euro Stoxx 50 down 100 basis points basically, the S&P 500 down 16.75 points. We closed yesterday at highs, and we've come off 17 points there. The NASDAQ also closed at highs yesterday, has come off almost 90 points. There are tempered expectations, the main events, tempered expectations for Ukraine ceasefire. There's conflicting reports as to whether or not Russia has pulled back its troops from Kyiv. Germany this morning reported pretty high inflation. Year-on-year preliminary for March came in at 7.3%. The prior's 5.1%. Big jump in prices. And the consensus was 6.3, forecast 6.5. Month-on-month prelim for March in Germany is 2.5 versus the prior of 0.9%, 1.6% consensus, and 1.5 forecast. That's a big jump in inflation in Germany, and you're seeing that reflected in the DAX there very directly. ADP came out at 8:15 Eastern. ADP is a payroll processing company, the largest payroll processing company, and they released their employment change in March based on what they see through payrolls. The forecast for them was 450,000. Or the consensus was 450,000. The actual came in at 455,000. So just slightly better. And remember, we get non-farm payrolls from the U.S. on Friday, a major number, and this number here, the ADP employment change, kind of foreshadows that. GDP growth came in as well. Q on Q came in at 6.9% versus 7.1%. So here, U.S. GDP is coming in a little bit softer for Q4 final. So this is the final number, came in softer than what was expected. For the rest of the day, we have the EIA numbers, energy numbers at 10:30. We have Japan's industrial production. And then this evening, China's MBS manufacturing PMI, a key number. look for that. The consensus is 49.9 if you're trading during those hours. Turning our attention to what's going on here in the commodity space, crude oil has really staged a reversal and has come back to 108. Crude reached 108.22, very close. It's right near highs. The low is 104.55 cents. It settled yesterday at 104.24. So it gapped up and it ran all the way up to 108.22. Crude up almost 4%. This is quite significant, and of course a drag on everything else. The S&P 500, a relatively light volume, light trading this morning, completely balanced profile. The inventory is almost 100% short, meaning almost all the volume has traded below yesterday's settlement. So inventory is 100% short, and the range is 25.5. Very tight range. This is the tightest range we've seen in weeks. So we're coming into a session that is quite calm. This is yesterday's Trader Bite. You can always go back to my channel on YouTube. You can find it at youtube.com/FuturesTrader71, and you can watch any of these videos that are being streamed live right now as I speak. They get recorded, they get put in the archive. And yesterday we talked about 22.23. The expectation on the primary scenario is a push to 22.23 stock zone and a drop to 88. A drop to 88 with the gap zone remaining open between the low of yesterday and the high of the prior session, which was 45.69. Here's what actually took place. So that was the plan, and then was looking for a rip higher at the end of the day. So push up, test down, right? Get below the over underline, test down, and then push back up to the highs. Here's what actually happened. So open, push up. Where does it go? 46.23. Trust me when I say this. This is a rare event where it turns what we're expected to the tick. So I don't want to play this. I don't want to make a bunch of noise about this because it is pure luck. What you see here, the reality is this is pure luck that it turned at that price. When I say expecting a turn at 22 to 23, the market generally pushes through or stops short by a couple points, pushes through by 3-4 points. So please don't sit here and think, well, there's some magic sauce here. There's some secret sauce here that causes me to predict where the high is. This is purely accidental. Statistically speaking, it is bound to happen multiple times in a year. So don't take it as more than what it is. We went exactly to the 23. We put in a top at 23. We traversed the entire range. And the expectation is a push to 88, which is right here. This is 88, right? A push to 88, and then the expectation is consolidate and then push back to the high. So this worked out exactly as expected. No, you're not going to be able to buy some product that I've just marketed that tells you where that high was and tells you where the low is, and it works every day. No such thing. We're playing the odds. We are making a career out of trading probabilities and trading with a good, strong understanding of the auction. And that's why I mentioned statistics in the Trader Bite. And that's why I go through this painstaking process of talking about what happened yesterday, what is happening now, what is likely to happen next, and pretty much everything I talk about is exactly transparently what I cover all day long and what we do study halls about at Convergent Trading, and it's exactly how I trade and how I've traded for the last, since I stopped being a market maker or a heavy volume scalper in 2005, this is how I've basically traded. It has not changed in years and years and years. It's very consistent because it's built on true and very, very important market fundamentals. So yesterday we held below the mid. We tested the mid a couple times, and as it pushed lower, the bet was we would get that 98% historical probability. Again, past performance is not necessarily indicative of future result. IB stat. So we expected the IB to be taken out at the bottom. Didn't expect it to push all that far. Maybe it might get to the 77, which is a very big multiple high level, very important level there, a big stock zone. Maybe it'll extend there, but I did expect it to run at the end of the session. And what that set up, it finally squeezed higher. Once we got above the mid for the session, now we're locked and loaded long, and the long was not found until the 14. I narrated this trade in real time at Convergent Trading's head trader channel, looking for the 14 long with a very, very clean, clear. This kind of trade is so crystal clear. It's an A+ setup. We've squeezed down. We have the point of control below us. We've pushed through the mid. We've tested the mid and found buyers. Look to get long. Find a place where risk is defined. Could not find a place where risk is defined until it set up this zipper where the risk is at 12, the entry is at 14, the target is at 23. So we're risking 2 points, and we're looking for 9 for a 4R on a one-to-one basis. It's a 4R return, but because I scale out, the return is more like 3.2R, which is as good as it gets. And then the next area up was expected to be 46.33. I believe there's a stock zone up there. Yep, 46.33. There it is. So I was gunning for 46.33, and it ended up dipping back to 20 and finishing near highs. The buyers looked weak to me into the close here, despite the fact that we closed at highs, and we ended up with a double distribution profile with the lower distribution at 46.12, basically 46.11, 46.12. We're trading at 46.07, so we are down here now. We are down here, so take that into effect. Note that the delta was negative all day long. It climbed and it fell. Look at this delta for the entire session. Very strong positive delta yesterday into the open, and then it just came right down with price. And it just seems like what that's telling me is it's starting to it's starting to find participants who are willing to liquidate at these higher prices. So we do expect a little bit of a pullback. We left a gap behind yesterday. Let me turn off the stock zones because they're forward looking. We left a gap behind. We never tested the 77 area, this key high swing for the month of February. We never tested it from above, and I'm expecting us to kind of walk back to that at some point over the next few sessions. Now we have non-farm payrolls on Friday, and it might get it done there. The next key session to test above is that 46.75 MC point of control. That's the next big magnet. Okay, so that's the lay of the land. We have light volume, we have a small range, we have a balanced profile. We're inside of yesterday's range, and it is likely to be a resting day today. So come in with the mindset that it's very likely to be a relatively choppy day. So we want to compress our targets, compress our risk, to match and be very selective today, because the market seems to be finding balance, and it's likely to trade in balance today, so you don't want to be looking for breakout trades, in my opinion. So that's that. Looking at the bigger picture, there we go. Looking at the bigger picture here on Edge Pro X, what is going on? Okay. On Edge Pro X, we've had, it's the end of the month basically. Tomorrow is the last trading day of the quarter. Very significant day tomorrow. Pay attention. We're coming into the end of the month and we have some pretty strong separation between the monthly VWAP and current prices. You can see the S&P has left the VWAP in the dust below, about 250 points down, and so we have this kind of rubber band effect that is going on. To me, I would start, if I'm not a swing trader, but if I were a swing trader and I had a gun to my head, I would say start pulling back on risk if you are swing long. Same with the Dow, same with the S&P, same with the Russell. Things have run quite a ways. We saw the bonds and the 10 years push higher yesterday, but then yields are just still way aggressively increasing on the long end of the curve. And even more so on the short end. So it's the market is really forecasting trouble ahead in the 3 to 5, I'd say the 2 to 5 year range. We're looking at some inefficiencies here, but overall, crude is coming into line. Look at crude for the month. It has battled its VWAP. Crude is balancing out. Crude appears to be building a triangle compression, and the expectation is it's likely to attempt to push. We generally don't push an impulse to new highs and just come right off. We generally push, consolidate, and retest, at least put in a lower high close to it, or at least poke it by a few. So crude is expected to turn higher still. Gas is running, of course, because of the issues in Europe. These products are going to change dramatically once the issues in the Ukraine get resolved, as we saw yesterday. Let's take a look at what's expected for today. But again, in case you just came in, there's a link on your YouTube live chat at the bottom, at the top. It's pinned for you to participate in today's show, Futures Radio Show, drawing of 3 Bose Quiet Comfort headsets. Really excellent noise canceling headsets. Your entry is due by 11 a.m. and then I'm going to be on at 12 p.m. Eastern to talk about the how-tos of trading sustainably. So I'm going to go through several bullet points that will hopefully help you put together a more professional, more sustainable approach to trading. It's not the sexy stuff like here's 3 setups that make $3,000 a day type stuff, which is unrealistic. None of that stuff works. This is more about being a professional, how to sustainably run your business. Be sure to register for that. Let's take a look at what's expected today. Again, the URL for that is edgeclear.com. It's sponsored by EdgeClear. I founded and own EdgeClear, a futures brokerage. So be sure to sign up, edgeclear.com/deli. Okay, so what have we done? We have the point of control beneath us now. The point of control is up here. We have VWAP in mid above us, point of control between us, beneath us, and we have one of those sandwiches, folks, and we are right on top, trading right on top of the low volume nodes, separating yesterday's upper distribution with the lower distribution, yesterday's balance. was down at 4,600. I expect chop. I expect us to try to push higher, but I'm looking for this thing to come back to the overnight point of control for that stat, and I'm looking for it to be sucked into the magnet. I'm looking for us to test below 4,600, get into the magnet, consolidate, and I expect us to finish weak today. I expect us to finish down weak. If anything, it might test into this 45.77 area would be the target. Let me see if I can draw a target. Wow, look at that. That's a target. That's a dartboard. So that's what I'm looking for. I'm looking for it to start working itself back towards that gap from yesterday and the key swing high, which it remains untested. It's not natural for it to just run through a triple top on a daily and not check to see support in that area. So I'm expecting it to do that at some point. The secondary is really the opposite plan. We push through the 46.02 that we put in, still a weakish low, push through, find ourselves at 4,600, poke the 4,600, and then get impulsive upwards. If we get impulsive upwards, I'm going to be looking to get long somewhere in the range of the 46.11, that separation between the upper and lower distribution from yesterday, and look for us to take out the 46.31 and test the 46.33 at least, if not push higher towards 40. That would give us about 40 points of range, 45 points of range for the day. That would be scenario 2. This is a continuation of the one-time framing up and the trend. Okay, so daily and weekly trends are now positive or on the buy side, and that's the easier flow. Okay, so I hope you're picking up something every day. That's a boob. It does look like one. Sorry. I hope you're picking something up every day, and you're becoming better as traders. That's the best way you can pay me back, is to just get better at trading. And of course, if you're trading, to trade at EdgeClear, that helps support what I'm building at EdgeClear, of course. But just make sure you have a plan, you have a map of what prices you're going to look for and what setups you're going to take, and then your job is to sit there and wait for the market to give those to you so you can act, and then act with resolve when you do. Good luck. I'll catch you at the show today. Make sure your entry makes it in by 11 Eastern, edgeclear.com/daily. If not, I'll catch you on the show live. It'll be on video, on YouTube, distributed on YouTube, and so on. That'll be at 12 p.m. Eastern. Again, edgeclear.com/daily. Take care.